Hello guys, welcome back to another session of factors to consider when selecting points of interest. As usual, this is one of the sessions where we select a particular asset class, analyze that asset class extensively, looking at trading elements like liquidity concepts, market structure, and other trading elements we use in our day-to-day trading activity. So today is 17th of June 2025, and the asset class we want to look at is gold. Now there's a reason there's some mark-ups on the chart, because we analyzed this chart I think probably about 4 to 5 days ago, and the video is here on this channel. So basically this is just the concept of the analysis we did, and you can see so far the market has been making move after tapping into that point of interest which we analyzed. Okay, but this is not the focus at the moment. Let's go to the higher time frame, analyze this asset class, look at the factors that we put in together to get this thing, and look at the possible ways we can enter this trade. Okay, because as at this moment we are yet to participate, right? The reason for that is nothing more. We want to take this trade during a session, preferably New York session. Okay, that gives us a higher edge in terms of saying that our setup has a higher probability of holding out. So let's go back to the monthly time frame. So this is the monthly time frame for gold, and briefly just going over what we've discussed in the previous session. We said the market structure was generally bullish in the sense that we have the market just taking out previous month highs, previous month highs, previous month highs, right? So based on this, you can see the market is just one-sided. Now going to the weekly time frame, what we have on the weekly time frame, we said we had the market breaking highs, which is external range, and then dipping into some sort of range, which is a fair value gap, right? Now before the market continued, it dipped into the fair value gap, pushed up, broke external range, dipped down into a fair value gap again, broke external range, now dipped down into a fair value gap range again, right? And then now we are on our way to this high that is marked at the moment. So this is the draw on liquidity. We are expecting that there's a probability the market will end up reading this high. This gives us the concept of why our trade idea is bullish, right? Now going to the daily time frame, we try to select our point of interest. From the previous video, the analysis we did started from here. We marked this point of interest, saying the market will dip into this level and push up, and you can see the market actually pushed into this level, right? And definitely the market ran to the upside. You can see the clean price run. So in one of the videos where the market was still here, we marked a point of interest, saying there's a tendency the market will tap into that point of interest and start going to the upside. In the previous video, I told you guys a major point. Since the market took out this high, the market will definitely dip into a fair value gap range before it continues to the upside. I said it in the previous video. You can go back to the previous session. The video, for you to find it easily, I've put the link of that video on the pinned comment section, so you can just check the comment section. You see the pinned comment section, the link of that video is there. Okay, so initially we said definitely since the market took out this high, there's a tendency the market will retrace into internal range, which is this fair value gap, or even dip down, right? And you can see at the moment the market is at the fair value gap range, right? Now going to the 4-hour time frame, that fair value gap range is also in line with the other block we marked also in the last session, and this was the other block we marked, saying that the market will dip into this level and there's a probability we can see the market run to the upside, right? Initially we wanted to select this level, this other block above, but we did not select it. Reason being, we said for the concept of liquidity, right? Saying most likely this will be a swing low liquidity, right? And most likely the market will end up trying to trap early buyers over here. And you can see the market definitely took out the zone. And probably now we are expecting to see how the market can run to the upside. Okay, so based on this idea, the reason we also said this was a swing low liquidity was because when we push to the daily time frame, let's mark it out first. I want to show you guys something. Let's mark out the level, the low of the level, right? Let's go back to the daily time frame. So on the daily time frame, this was the low of the level of that other block. The reason we didn't select it was because the market already took out external range. And I always say when market takes out external range, you can expect some sort of retracement into internal range, right? So that means this is not an ideal discount level for you to buy at. So hence, You have to look at the entire range from this high to this low, this recent range that was created. You try to see where is a discount level. That is where you mark your point of interest. Marking a point of interest near this red line or above is low probability because it's not a discount price range. As I always say, if you draw your fib tool from the high to the low, you will discover that definitely that level is not a premium price range for you, discount price range for you to buy at, right? You can see over here is above, right? But level 0.5, anything below level 0.5 is a discount price range for you to buy at. So going back to the 4-hour time frame, on the 4-hour time frame, this other block was definitely within a discount price range, and we selected it because it was also inside the discount fair value gap, which we expected the market most likely will drop into, and the market has done that already. So based on this, we have the 4-hour time frame. The market tapped into this other block range over here, right? Let's go to the 1-hour time frame to see the clean thing we marked out. On the 1-hour time frame, we marked this out, this other block. That was what we cared about initially. This, you can see how clean it was. So the market got into this point of interest. So what we want to see now, okay, is we want to see how the market can give us a clean change of character to the upside. Preferably, since the PDRA was on the 4-hour, you'd want to see a change of character on the M15. Okay, so you can see so far we are yet to have a change of character to the upside when the market tapped into the level. Okay, the recent one, there was no change of character actually over here. Yep, the market did not break anything to the upside over here, just trending. So there wasn't really anything for us to care about. Initially, this will have been a change of character. If you're looking at it like this, it's not too smooth, but we will have expected the market to take out this level. So even if the market, let's say, did something like this and still took out this level, we will have tried to participate over here, but the market failed to take out that level, you can see, and so the market reversed. So we are yet to have a change of character, right? So all this, we don't really care about this if we want to enter. Preferably, I always say you want to see that change of character happening at your point of interest, preferably during a session, maybe New York session to be precise, right? You can work with the New York AM or PM session, anyone, it's all right, right? Because we can see the highest probability setups, you can get the best moves during that period. London session is a little bit more tricky, you know. New York is the easiest time you'd want to look for this. So if this doesn't fall in New York, you just forget it, right? And you can see, moreover, today we will have expected maybe the market will push to the upside, but you can see still what we have. We are yet to have a change of character to the upside, right? Initially, if this high was broken by this low, then yes, we can accept taking a trade over here. But since the market did something like this and it's yet to break that high, which is the recent level that caused a break of structure to the downside, you can't expect to trade. You just get wrecked out if you try trading over here, right? So the change of characters are of two forms. Sometimes you get a clean change of character, the one that we all know, the break of market structure, you'd participate over here. Sometimes the market can give you something like this, break and then start doing like this, and then ends up breaking this point. This is also valid. Okay, so you can see initially, assuming this level was broken with this high, we'll have tried to participate within that leg over here, within this leg, but it did not break the level, so we are still neutral, right? For some traders who want to go in aggressive, which I'm not advising you, I'm not a financial advisor, some people will try to go aggressive from this point, putting the stop loss below, and they try to go out above the high. It's all right, it's okay, no problem, right? But for me, I'm a day trader, and I don't see it convenient to enter at the 4-hour time frame directly. So you have to cut it down to the lower time frame like the M15 or M5. So basically, this is just the schematic idea of what we are waiting for now at the moment. You can see you don't want to really get chalked up over here. Reason being, the market is yet to break structure to the upside, right? And we said this level is definitely a high probability point. Reason being, liquidity was generated. As at the last session, we discussed the type of liquidity, saying this trend line occurred, right? And we want to see a situation where the market will break the trend line and then try to retest and start selling. Now, trying to induce traders most likely to start saying, oh, the trend line is forming again, and you want to start going for long-term sell opportunities. Unfortunately, we said the idea of the liquidity, since the market structure is bullish on the higher time frame, most likely the market will now read the highs to the upside, right? All this, we discussed this in a previous session, and you can see the market definitely broke that trend line, and now the market is given a downtrend line like formation. A downtrend is occurring over here, like this. So basically, now the type of liquidity over here was trying to induce traders to sell short, and over here the market is also trying to induce traders to sell short. Why? Because we said when you see this type of stuff in your point of interest, there's a law of liquidity. I always say, if the market wants to buy, the market will do well to trick traders into placing selling opportunities. This is a schematic example of how the market can do that. When the trend line is being made, the market will try to trick traders into placing sell opportunities, right? And most likely the market might tap into the point of interest and we shoot up. There's a probability that can happen. Okay, so just as clean as it is. So the reason I'm making this video, just wanting to show you that the last things we discussed in the previous video, you know, these things are factors we definitely have to consider when selecting points of interest. You see, for example, the point of interest initially we tried to select, which was this. We said it's going to be low probability. We said it was going to be a swing low, and definitely you can see the market raided that level, right? It being a swing low, expect that this should be the real point for the market to run to the upside. Okay, so basically this is just the basic concept we have at the moment. We're still keeping our eyes on this level, and if we can have a clean break of market structure to the upside within one of the sessions, you know, it's okay to also take it at the London session. Don't mind me, okay? Just get good idea of what has been happening. Did you have a clean break of market structure to the upside? The level is valid, fine, take it within the session. Just take it within London or New York. Okay, I'll advise you best to avoid Asia. Just work within these two, London or New York. You find your entry confirmation, you deal with it. Okay, so this is just the basic concept of what I have to share with you in this video. Just wanted to give you insight with regards to this asset class, which we have analyzed, and we did analyze in this session, of course. I hope this video session was insightful. Next time, I wish you good luck and good trading.